There are some very crucial actions which you should do if you want to grow your money. The rich people did all these, and that's why they got rich. Well, in this financial video, we will be telling you about the 10 money moves which you should make to get rich quickly. Watch the video till the end, or you may miss some crucial steps. Now let's start. 1. Maximize your investment in a retirement plan. At age 50 and up, employees can put $30,000 into workplace retirement plans like a 401k or 403b with catch-up contributions. This is a great opportunity to maximize tax deferrals if you are still working and have the cash flow. Due to the potential tie-up of those funds for several years, you should have a sufficient income to permit this type of saving. The tax benefit of making the most of your deferrals may not seem substantial at first, but it can add up if you're nearing your earning peak and reside in a state with a high flat rate. 2. Give to charity with 2 sets of eye. Some people don't realize they can deduct all of their charitable contributions, even though it's the most obvious place to do so. When filing their taxes, over 80% of people use the standard deduction. There are different choices. From their IRA, individuals over the age of 70 and a half can contribute up to $100,000. Donor money is not considered taxable. In addition, you can avoid paying capital gains taxes if you donate an appreciated asset, like stocks, rather than selling it, even though doing so may not result in an additional deduction. If you want to know the best financial tricks to get rich quickly, then do press the subscribe button and also the like button. 3. Make preparations for the owner's retirement. Among American small business owners, over 54% are 50 and up, says the Service Corps of Retired Executives. Not everyone who works for themselves knows this, but they can still contribute to a retirement plan. Additionally, they will be able to save more money for retirement and pay less in taxes now or in the future. A 401k, SEP IRA, or simple IRA is an option for employers. 4. Put your money into treasury bills issued by the United States. A licensed financial planner in Frisco, Texas, claims that relative to other investment options, only U.S. Treasury bills provide the same level of security. A year or less is the maturity date of these U.S. securities. Right now, you can get more than 4% interest on a 2 to 6 month Treasury bill. The benefits of Treasury bills are numerous. The investor saves time and money because they mature so fast. The principal stands to gain even more as the Federal Reserve raises interest rates in an effort to curb inflation. Since Treasury bills will most likely keep paying more in the event of further interest rate hikes, investing in them is a good idea. Purchase them from treasurydirect.gov at no cost to you. 5. Locate all of your subscriptions. There are a lot of people who would end up with subscriptions they never use, especially the elderly. Netflix, Hulu, HBO Max, Paramount, Peacock, and Disney Plus are just a few examples of the popular streaming services that have attracted viewers of all ages. You should think about where and what you watch for a while. Maybe you can reduce your streaming platforms to just 1 or 2. It's a good idea to check account details like Amazon Prime or smartphone service as well. In a number of services, users can get access to other services for free. Many would give the example of T-Mobile and their free Netflix and Grubhub subscriptions to Amazon Prime members. 6. Keep an eye on how your way of life is evolving. When you were first starting a family, you might have looked for ways to cut costs, like buying store brands and making frequent use of coupons. It is possible that you have eliminated coupons and switched to more expensive name brands at some point. It could be that we need to return to the fundamentals now. If you and your pals are interested in saving money by purchasing in bulk, you might want to think about joining Sam's Club or Costco. Buying in bulk can save you money on many items, but only if you have a strategy to use them all. Making a list of everything you and your friends use, then buying in bulk and splitting the bill is one possibility. 7. Choose the Roth IRA option. According to a certified financial planner based in Portland, Oregon, 2024 is going to be an ideal year for Roth conversions because 401k and IRA balances are low due to market corrections. Everyone can benefit from this, but those who haven't begun collecting Social Security benefits are exempt from RMDs. The amount you convert will be subject to income taxes, but if you look at the long-term benefits of a Roth conversion in 2023, it's a net positive. Retired clients between the ages of 50 and 70 are the target of another financial manager's recommendation that they think about a Roth conversion. As required minimum distributions kick in, individuals with sizable assets in IRAs and 401k are likely to experience a heightened sense of taxation. Given the general decline in asset prices this year, a Roth conversion could be a great way to take advantage of any future gains without paying taxes. 8. Build a credit line. With the economy in a state of flux, having access to a line of credit is more important than ever. In an ideal world, you would only dip into it if you were laid off from your job or had an unforeseen expense that would force you to liquidate an asset at a loss. So that we can handle unforeseen costs, it is often said that we should keep a healthy cash reserve. This is still a rock-solid rule of financial planning, but not everyone has that kind of savings lying around, so a credit line can serve as a temporary safety net. A credit line, however, should never be utilized to support an unaffordable way of life. You should aim for a credit line that is easily accessible in case of an emergency but seldom tapped into. 9. Create a savings account with a high yield. Prices are rising faster than the value of your money. Investing in the stock market is a major source of stress for many people, but they fail to account for the impact of inflation on their purchasing power. Those who want to ensure that their savings will last them a lifetime face a serious challenge in the form of inflation. High-yield savings accounts have been offering increasing interest rates, with some options offering rates as high as 3%. For peace of mind knowing that your money is fending off inflation, open a high-yield savings account and put any spare cash there. 10. Lie down and, partially, relax. The market can be intimidating at times, but you shouldn't let that deter you from saving and investing just because the economy is so unpredictable. When the stock market is in a tailspin and the news is predicting disaster, it's important to ignore them and concentrate on your own actions. You should tune out the chaos of your immediate financial situation and focus on the serenity of your long-term strategy. When you give in to market fluctuations instead of maintaining a steady course, you increase your chances of financial disaster. Make a plan for your finances in 2024 if you don't already have one. That's all for today. Now you know all the moves which you should make now to get rich quickly in 2024. All these tips are suggested by famous millionaires like Sir Warren Buffett, Jeff Bezos, Robert Kiyosaki, Charlie Munger, Elon Musk, and all others. You must be innovative and you should have a vision for your money to actually make it grow. Sir Elon Musk is very ambitious and he always dreams of new things, but one thing is very crucial, that your dream must be singular. You should place one aim at a time. If you want to know more amazing financial tips and secrets, then please do press the red subscribe button and also the like button. This small action motivates us to do more research and make more new and amazing videos for you guys. Comment below if you are having any queries or suggestions. Share this video with all of your friends and family members. Thank you all for watching the video till here.